Alrighty, good morning, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. TGIF, I am really excited for the weekend. I don't know about you guys, but I am excited that it is the weekend for certain. This has been one of those weeks where, it's like, have you ever had those weeks when you trade and you feel like nothing's going right for you? That's this week for me. So I've had a really not a great week trading. So, and that happens. If anybody says that stuff doesn't happen, it does. It seems like right now, though, it's more common because, we're obviously grinding higher in the S&P. And when you grind higher in the S&P overall, the volatility is low. So there's a lot of whippiness, and that's the case right now. And so when I have an off week, it's like I try to take a step back and say, well, I know why, so therefore, try to be a little bit more careful or whatever the case may be. But right now, I'm going to just reference the fact that we are still grinding higher in the S&P, and that even though we may be down a little bit right now, remember it is end of month, not end of quarter, but end of month. And so there's probably a lot of positioning going on. So, I mean, if you look at the S&P, we're still really just well above the 4170 support that we talked about yesterday. And then obviously the 4110. This is nothing new. Same numbers we wrote down yesterday. 4110, 4170, those are key supports, right? Resistance, we're struggling here at the 261% extension and also at trendline resistance here. But that doesn't mean that, it's the market's a good short. It may have been for the last, few hours, but remember, we are in North American trade. It is end of month. We might have some buying coming in. And unless we start seeing a break below 4,100, I just assume that we're just continuing to grind higher. So resistance right now, we'll mark up the overnight highs, which would be 42.20. Beyond that, in case we go beyond that, is 42.40. Okay, and that's going to be bullish. So let's talk about the dollar. The euro looks a little weaker this morning. We are trying to stabilize here. And before you get too excited about the euro, let's look at this first. The dollar index. Okay, the dollar index is actually at resistance. So even though the euro looks like it's breaking lower, just keep in mind that the dollar index itself is at resistance right now. And the reason why I say that is because if the whole dollar complex starts to turn here lower, like look at the damn dollar Canadian can't get out of its own way. The Kiwi's up near its highs. So I mean, if in the dollar index, or excuse me, the dollar index, the dollar yen's near 109. I mean, if the dollar starts to turn lower from here, if you're trying to trade like the euro, that's going to end up being a false breakout, right? So I'm going to write down dollar index resistance right now is 91. That's going to be pretty key. I know it's trendline resistance right now, and we could probably just mark up today's highs, which is 90.91, but I'm going to mark up 91 flat for the dollar index. And I'm going to say while we're below that, we've got to actually keep it in a bearish designation until we get out of this channel. Okay. Once we get out of this channel, then, that might be a little different. But for right now, we've just got to keep it on a bearish designation. Okay. Support. Hold on really quick. I'm just trying to think intraday here. Support intraday is going to be around 90, 60. I would say 90, 90, 70. Should we get down there? Okay. And below that would be, I mean, I'll write 90, 40, but okay. So continuing on, let's go over to the euro. So the euro does look a little weaker this morning. I think the euro, in order for the euro to, get back up here towards these highs, and I'm not going to ignore the fact that we have this little breakdown, right? So that means this 2050 really right here is really key. So let's write that down. And resistance right now intraday. Well, it's going to be 121, which should coincide with that trend line. So, well, I have it at like 121.10. So it's somewhere around here. I'm going to write down 121.10. And I'm going to keep it in range because we slipped back below the 121 level. Okay. But by the end of the day, I mean, if we close, the euro back up here above 121, like 121.10, 121.20, we're going to have to flip that back to bullish, especially by the end of the weekend or by tomorrow, by Monday. Shoot, sorry. All right, here's the cable. So I tried to buy the pound a little earlier, and I tried to fade Amanda, I didn't really try to fade her specifically. I was just buying it down here at this 139 support. I ended up fading Amanda, and to my detriment, it went lower. And I got stopped out when I was on the webinar. I was like, damn it, why am I even trading before the webinar? I was like, oh, it looks like we're holding support. So, and I thought the euro was going to hold the 121.80, which it did. But I thought that would actually create a little bit of a bounce in the cable. But no, it's the euro pound went lower. So, or excuse me, the euro pound went higher. Pound dollar sold off, and so it slipped to triangle support. And so that's kind of what happened here. So we are at horizontal support, but I would be more focused at the triangle support here, which comes in at 138.40. DDA says, don't go against Amanda if that's what if you want to stay alive. No, I was one of those things. I'm like, oh, I'm buying the cable here at 139, and I bought it. And then I looked at the chat room. I'm like, ah, crap, everybody's short. that's kind of what happened. And I'm like, yeah, well, screw it. I'll stay in because I know what my risk was. And I bought it like 139.04, and I have my stop at like 138.96 or something, so it's just, I just wanted to try to pick it off the lows there. Yeah. Well, that happens. 138.40. All right. So, and the thing about the cable is we're stalling here at this trend line. We are not able to take out this trend line. So that means this resistance is really important. Doesn't mean we can't break. But unless we get above, this resistance, I mean, we're going to continue to struggle. And it's scary that it's not even trying to participate too. So Ozzy. Now the Ozzy tested this trend line. I was talking to a trader yesterday, regarding the Aussie, and we're just discussing, or I'm sorry, I was talking to, I say a trader. That's because I couldn't remember his name at the moment. I was like, who was it that I was talking to? I was talking to Chris Weston yesterday evening. It was late evening for me, so I was talking to him about, the thing about these commodity currencies is that they're not participating higher, and that's the thing that worries me the most about um, the continuation of a trend higher in stocks. Now, what I what I think is going to happen, and this is just me thinking out loud, is I still think that the stock market is going to do one of these. We're going to just start to accelerate higher, maybe here in the next week or two, as we head into May. And what I think would happen with like the Aussie would be something like this. And I'm just going to do this like this. Like, it starts to take off, breaks some of this resistance, gets everybody like, anybody who's short, squeezes them. We fail to make a new high and then reverse. Something like that. If equities continue higher, that's how I would see the Aussie. But it's still, you can't ignore the fact that it is not participating in this rally, and that it's been my big hang up with the Aussie for a long time, and it continues to be that way. So, but for today, it's holding this trend line right here. So that means this 77.50 is support. And you know what? If it drops below 77.50, then we have to focus right at 77 cents right here. Resistance is at 78.20 and 78.50. So 78.20, 78.50, and we have to keep it in range. Kiwi's pretty damn strong today. I mean, or I'm sorry, it's been pretty strong as of recently. I was just looking at what I thought it was, but I was looking at something else. Kiwi but it has been pretty strong, and it's been leading this move higher. The problem that I see with the Kiwi is you see the Aussie New Zealand is starting to bounce. And so if the Aussie New Zealand bounce continues, that's probably going to be more of a headwind for the Kiwi. But we keep challenging this this channel resistance. We are struggling here at the 618. So any move back up to the 72.60 is probably going to find resistance today. And support 71.90. All right, dollar Canadian. So I was talking with one of the guys that I traded with regarding the dollar Canadian, and we were just discussing how heavy it is. I mean, and look, I'm looking at the 4-hour RSI, and it is very oversold, divergent, oversold, but that doesn't mean it can't continue lower. I mean, if you look at like 4-hour RSI just back here in October of last year, we went lower towards 17. And right now we're about 24, 25. So we can go lower in relative strength. Don't think it's not possible, because it is. And the fact that it's just not bouncing, it's a little scary. So I don't think you can rule out a move down to, below this channel support. It's just, it's trading heavy. That's the facts, right? Okay. Anyway. Excuse me one second.
It's Steve sending emails again. Ignore him.
Oh, I'm like, what the hell is going on? What's happening over there? Okay.
Just housekeeping on the European crossover. Don't worry.
Got it. All right. Thanks, Stelios. Support. I mean, we're going to write down today's lows, but below that, I mean, I have to reference that level down here. And I know it's scary because if we start plunging through this channel support that you see here, I mean, you know, you have to think where else can we go, you know? And I'm sure there's a lot of traders right now that are long dollar Canadian that are thinking, man, you know, it's got to bottom out here somewhere, right? So anyway, 122.66 is today's lows. Below that, I mean, we are looking for, you know, 122, really. Hate to say it. All right. Resistance right now, intraday. Well, resistance is just period at 123.60, basically. As long as it's below that, we have to remain bearish. And I hope we can get a recovery up there because I'd be a seller up there if we got up there. I just don't. I'm not sure if we're going to be able to do that. Dollar Swiss. The 200-day moving average continues to support the dollar Swiss, so keep that in mind. Resistance would be this spike high, which is 91.80, and support is at 90.80. So let's just write those numbers. I'm not excited about this at all. I haven't been excited about the Swissy in a while. So US dollar, Norwegian krona has had a decent bounce, but we are at what should be current resistance right here. So let's take the breakdown point here. We could reach for this 826, 827 level. That's a 50% retracement. But I would say as long as we're below 838, it's bearish. Support is obviously, well, we have 814, but also 810 is going to be the 161% extension. So just I'm just writing those down. Dollar Mexican peso. It's actually still holding up pretty well. This is one of those that, you know, if stocks stay bullish and we continue to move higher and the dollar Mexican peso doesn't break down, I mean, that's just, you know, that's just building the case that this thing is going to rally at some point. I mean, we are continuing to make higher lows, which is, I'm sure, pretty, you know, pretty amazing for a lot of people that are trading the dollar Mexican peso right now. They're probably like, wow, stocks continue to go higher, and yet I short dollar Mexican peso and it goes up in my face. So, and that's, you know, how I feel about it. I still am pretty bullish, even though I'm not long right now. I definitely, for me, I wouldn't be short. I mean, I would think that if stocks continue higher, we should at least stay pressured. I just don't know if we're going to break down because it seems like impossible to go down, like to break down from here. But I felt that way about the Canadian too. And then the Canadian just imploded. So maybe the dollar Mexican peso will eventually just break like the dollar Canadian did. Let me check something really fast for you guys. Give me 1 second. 1 second. Clear. So next week, I was just kind of looking at some Mexican data. Next Friday, we have inflation data out of Mexico. Today we have GDP, just FYI, a little bit later this morning. Oh, no, I'm sorry. Friday, April 30th, right? Did it come in? It looks like it came in a little early. Anyway, yeah, so next Friday, just keep that in mind. Inflationary data might be, a catalyst that moves the dollar max. Okay. Dollar yen. $109.25. Support is going to be 108.35 again. So I think those numbers stayed the same. We moved that to 108.50 because of that low. And 109.20 because that's the 50%. So those numbers are correct. I mean, you could actually say 108.35 as well, but whatever. Let's take a look at gold, silver, and Bitcoin. I wish I could be more excited about, these assets right now. Gold, we did hit that 1760 and bounce yesterday, but I mean, that's pretty lame move since yesterday. You think about it, like, and I know we sent out an alert and I tweeted about it at that time, but it's like it bounced from 1760 and we've really been in a 5-point trading range in gold since then. I mean, that's pretty uneventful. So 1760 and now trendline resistance is going to be 1785. And then after that, 1804, if you guys don't recall. And it still has to be, well, we still have to be bullish because we're still respecting this support. Silver, $26.80, $25.60. We're in a range. And then Bitcoin, Steve's absolute favorite investment of all time.
He's all in.
He's all in.
All in.
I think he sold both cats to go all in.
Absolutely.
And his wife.
And his wife.
That's the easy part.
You're lucky she's not standing right next to you right now. 50.
Almost.
56K. And then obviously the support. I mean, we're not even making down to 51,000 now. So, but I still feel that this down here is going to be, this whole support zone is really key. So I am going to write down 51,000 still. So there you go. you know, guys, it's end of month. And I think you should just be a little, you know, a little careful here. I was looking at a lot of traders on, you know, on financial Twitter. A lot of the, you know, I actually got another note from a friend that the euro is breaking down today. And I mean, I hear what I see what everybody says is the, you know, the euro's below this channel support, and you know we're back below 121. But I just got to go back and take a look at this dollar index and just remember the dollar index has been pretty clean. It's been pretty clean, you know, stair step lower. So just if the dollar index starts to turn lower here, we get back below like 90.80. Just be really careful with dollar longs if you have any dollar longs. And remember, it is end of month, and if you look at equities, they are still just grinding higher. One of the things that and I'm not going to give you away our whole conversation with Chris Weston. That's going to go out in our newsletter. But one of the things that you know we pointed out is we didn't have any excuse from Fed Chairman Powell this week to sell stocks or to, you know, to exit risk trades. There's nothing. He was as dovish as you could possibly be. So think about that. Even though, do I think the stock market is mispriced? Do I think risk is mispriced? Sure. But does that mean that institutional traders won't continue to chase the market because they have to beat yield?
They will.
Or, excuse me, they have to beat the market. If you're an institution, you're not beating the S&P. Sorry guys, my dogs are barking. You know,
or at least matching it, right?
At least matching it. Yeah, you're gonna get redemptions. So you have to be involved. And again, Powell didn't give us any reason not to be. And so we do have a jobs report next week, which is going to be really important. You know, we have the ECB and the FOMC in June, and then at the end of the summer we have Montana. Oh crap, I can't think about it this morning. It's early and I was sleeping really well when I got up this morning. Jackson Hole, Wyoming. Did I say Montana? Wyoming. Jackson Hole, Wyoming. So and that's also going to be a really big event. So there's a lot of things coming up. But as of right now, we haven't had any reason to really believe that stocks are going to go lower. Yes, I believe it's all going to catch up with the market at some point, but I don't know if that some point is right now. Anyway, Steve, Stelios, how you guys doing? TGIF.
Yes, all good. It's Easter here for Greece this weekend. So
yeah, you know, Steve, I hear he's celebrating Greek Easter.
I'm in church every day.
He's in church and he's hiding Easter eggs because it's an American holiday. For Easter, we hide Easter eggs. He's hiding Easter eggs in church in Greece.
Sorry, the only place I found in my life Easter eggs is computer games.
You know, I'll tell you guys, and then I'm gonna let you take over, Steve and Stel. One of my kids' favorite Easter or holidays is Easter, and you know, as parents, we would just hide the eggs all over the place. The kids have fun chasing, getting up in the morning, looking all over. And the fun part is when you find, you know, chocolate from like 6 months ago that's still hidden in a plant.
Oh no.
And then sometimes you actually have some of the hard candies that
and since you live in Arizona, I can guess.
Oh no, we don't hide anything outside. No way.
Okay.
No way. No way. Because by summer it'd be a big melted hot mess. All right, I'll let you guys take over. Thanks everybody for your support. I'm gonna go take care of my pooches. So
your what?
Is that slang or not?
Slang for dog. Poochies, not a pooch. Roof, roof. Sorry.
Okay.
I know it might have sounded.
Okay. I would love to give you the Greek translation of the equivalent word, but
You know what?
I
Americans.
think they're gonna cut us off air, so let it be.
All right, guys. See you
Thank
later.
you.
TGIF.
Thank you, Blake.
Bye, Mitch.
Yeah, so basically, I cannot help but agree completely with what Blake is saying regarding Powell and the Fed.
About
And
putschs.
about yeah, and yes, there will be fluctuations, but really the big picture at the moment, nothing has changed. We need the catalyst for things to really change, just like we got COVID in 2020, and we're going to get one. Is it going to be 10-year US going to 2% or above? Maybe. I don't know what it's going to be, but we're going to get it, and there's going to be a correction. Now, I don't think we're going to get an 80% correction like that guy who had on an interview.
Yeah, if only, but yeah.
I think central banks now, after 2008, they are
they're
quick.
willing to sacrifice everything else.
Exactly,
That's
and they're going to be
the problem.
so quick to respond, and they're just going to go in and tell the market we're going to give anything they need, and that's it. So if we get, in my opinion, if we get a 30-35% correction, that's going to be really good. But I don't see us going much lower than that whenever it comes. Yeah, all in all, unfortunately, nothing has changed. We stay the same course. The Fed does anyway, and anything that can be bought gets bought. You heard the story about Kanye West's sneakers being sold for $1.8 million. Did you hear that?
Why not?
Of course, obviously they were a unique example. There's not like there's 1,000 of them, but still, $1.8 million. Or like
why not?
There was a rare card, like one of these baseball cards, actually for NFL. I think Tom Brady. It got sold for $1.5 million. I'm like, it's a little.
In the context that nothing makes sense, everything makes sense nowadays.
Yeah, exactly. And and people are telling me, "Why you like rare cards?" And this is worth $1 million. Well, you can actually drive it as well, But that's a different story.
Yeah, although the argument that it has some intrinsic value doesn't really hold, because the actual intrinsic value of it is such a small fraction of the final price that, yes, I appreciate the fact that it has intrinsic value, but when the intrinsic value is such a small fraction of the actual
but it's
selling price,
better intrinsic value than a little piece of paper.
Oh yeah, undeniably. Anyway. But when all these fantasies implode, the value that will have been left behind is going to be so low in comparison to what they paid that I doubt it's going to be any consolation that they can recover that. You know what I mean?
Anyway, we keep going, and the music keeps playing, and like the ex-CEO of Citi said, as long as the music keeps playing, you have to keep dancing.
Oh yeah, absolutely.
So that's what the markets are doing.
Absolutely, and I'm the first one that says don't try to fade strong trends, right? It doesn't matter if it makes sense. It doesn't matter if the fundamentals make sense. It doesn't matter if there is some real value behind things that skyrocket or not. You can't go against a strong market just because you're right. Because until you're proven right,
you'll be bust.
You'll be bust, and you'll be living in a poor house. So it won't be any consolation then, right?
Yep. Yeah. Anyway, it is what it is. There's not been that much movement. The dollar is strengthening a little bit today, but in the grand scheme of things,
listen. Technically speaking, we have a nice evening star formation attempting to form, and I'm saying attempting because the third candlestick of this formation is the one we're currently working on as we speak. So who knows by the end of the day? I mean, there is no rule that says that we can't reverse the Euro USD losses of the day by the end of the day, right? But admittedly, it is interesting that we're getting an evening star formation right as we broke for like one day through this trend line resistance, and nobody's going to be surprised to tell them that the exact opposite is happening here in the case of the DXY. And also, in essence, if somebody wants to take into account the wake of this candlestick, somebody can even make the argument that the DXY never broke down from this trend line. It did break down from the 61.8 and horizontal support area at 90.80, but it didn't from this trend line support if you draw it like
That's
this.
a good point. That's a good point, actually.
Yeah, so and we are attempting to break through this descending channel trend line resistance. So somebody can make the argument that there is a hint of a possible reversal higher for the DXY and lower for the Euro USD, because keep in mind that uh, it's mostly, not only, but mostly a euro and pound move at the moment. So I have no idea why currently the dollar is trying to reverse higher, because so far stocks don't seem to follow. Yesterday, stocks seem to be reversing. If you remember, we were on this webinar and we were like 1 hour and 15 minutes within a reversal 4-hour candlestick that was pointing lower, and I said then, but that listen, the fact that we're having an attempt to reverse lower in a 4-hour candlestick doesn't say much, because by the end of the day we might close higher, as we did. Yesterday was a positive day in the markets, right? So far today, despite this dollar strength that's coming through, all we have for the time being, I know it's extremely early, is an inside pin bar in stocks. Now, I'm really curious to see, I'm going to trust this move a little bit more if we do see an attempt from stocks to also roll over and move lower from here. But as I said, it's extreme, especially if we're talking about the American stock markets, it's extremely early in the day. I mean, the market just opened. So, there is no point in trying to assume what's going to happen. Now, today is the 30th of the month, right? The last day of the month and the last day of the week. So it will be interesting if we get some type of a reversal at the end, last day of the month, last day of the week. Let's see. If we do get some type of a reversal, we can then reevaluate and look at some short-term downside targets for a possible corrective move lower on Monday morning. But until that happens, it's not that I'm really advocating that people should start trying to fade the recent trend in a Friday afternoon if you're in Europe, or in a Friday morning if you're in the US. I don't think it makes much sense. I think, especially on a Friday, the best thing you can do is just monitor the markets and see what we get, and then you can start fresh on Monday. So I'll put more faith in general in this attempt of a dollar reversal if we do see some risk off, because if we don't, as I've said before, I don't think that this move in the dollar, even if we get a rebound from here, will have legs. It will probably be weak. Now, yes, it is definitely being supported by this little breakout in yields, which can resume to the upside. But I made the case and explained yesterday why I think that even if yields produce another leg higher, which seems likely, right? I don't think that the dollar is going to be behaving that well in comparison. So yes, if yields keep moving higher, I doubt that the dollar temporarily is going to be moving substantially lower. But on the other hand, I really doubt that the dollar is going to move substantially higher either. Even if it moves higher, I think it's going to be in a very slow and choppy fashion. So not in a fashion that would inspire people to be long the dollar. Now, Greg already made a good case about gold, silver, and all the rest. As I said before, this looks probably the cleanest market at the moment for me, the platinum market, which is decently correlated to gold and silver. Now, platinum had a very, very big bearish daily candlestick at some point yesterday, and it was looking like it would break lower from this formation. But as the day came closer to its end, platinum started paring back its losses and ended up lower, substantially less than it was intraday, and not breaking through this formation by the end of the day. So there's no technical event yet. but I can't stop thinking that this type of move favors more another leg lower before we move higher. And that makes me somewhat skeptical with gold and silver, despite them holding up quite decently. Because as you see, gold and silver shared the same fate with platinum yesterday, meaning they were decently negative on the day at some point, but by the end of the day, they had pared back most of their losses to, in essence, close in a manner that's not really bearish. And so far, the move lower doesn't look that bearish. I mean, I wouldn't be surprised to find out that this is another bullish type of formation, for example, a bull flag, right? So keep that in mind. So it's mostly platinum that makes me believe that we might not be done and over with correcting lower in metals. And in any case, gold, as you see, is still far away from this corrective channel, right? I mean, from the trend line resistance of this corrective channel. I think we'll need an eventual move above 1850 to have confidence that, okay, yes, the correction is over and now we're headed much higher, because I do think we're eventually headed much higher. Now, palladium couldn't care less. It's a one-way street, moving to all-time highs. Same can be said about copper. So no real reason to fade any of these. Crude oil, nice rejection from this red channel, which leaves the door open for another leg lower instead of directly going higher. Now, I'm not saying this is the main case scenario, but in this case, we also have like two scenarios. One of them was that this was the whole corrective move, this triangle. The other one that we had one leg lower, this corrective move higher, and one more leg lower. So far, this second interpretation remains alive as a possible interpretation on the table, since we haven't broken through this channel. So the jury is still out, having to do with crude. Have we already broken higher and on our way to new highs, or there's one more leg lower missing before something like that happens? So obviously, as you understand, all these alternative scenarios would more or less require some change in risk appetite, especially crude. We know how well correlated usually crude is with risk appetite. So, crude substantially turning lower with equities remaining very well bid. Not impossible, but I kind of doubt it. So that's why I said, coming back to what I said before, I think it's very important to see if this attempt of a reversal in the dollar gets accompanied with some kind of a turn lower in risk. Because if it doesn't happen, I doubt you should trust the dollar move. As simple as that. Okay. Now, commodity currencies have also turned lower against the dollar, but in a much softer manner than, for example, the euro or the cable have done. So yes, somebody can easily say here that the head and shoulders formation potential is still ongoing in the case of the Ozzy, for example, right? Somebody could also make a claim that Kiwi's rebound might be corrective and we might need to get another leg lower before higher. But I have to tell you that my main interpretation remains that in both cases we've broken out of a corrective formation and we're likely to move to new highs. Same applies obviously for the USD CAD, USD NOK. I think both of them have a much better potential of moving even lower than reversing from here. Especially USD CAD seems very bearish, right? We have punched through two new lows. We're now attacking this channel trend line support, and next target is the multi-year low that we saw in September of 2017 at 120.60, right? Keep in mind that that's a 6-year low, because then to find these prices again, you have to go back in May of 2018 15, right? So we're talking about a 6-year low at 120.60. So quite an important level. So, I wouldn't be fading any of these until I see, more concrete evidence that something is changing. Palladium, copper, nickel. Okay, we covered those with the exception of nickel. So let's have a look at nickel. Where is it hiding? There it is. So here's nickel. Testing this channel strand line resistance a little bit higher, we find this key area of resistance, 61.8% fib, high, 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 low, right? So horizontal support resistance area. I think that's the bull bear line in essence, this 1338. I think that as long as we trade below like 1338, there is a good potential for another leg lower in nickel before we see a resumption of the uptrend. But if we break through 1340, we've probably seen the low and we're on our way to new highs. Lit. Let's have a look at that. Lit. Is this the one that you're asking? Okay, this is the one you're asking for. Oh my God. Look at this value. I mean, everything. Yeah. Okay, so having to do with lithium, obviously in a massive uptrend, right? March of 2020, $18. 2 months ago, 75. So, of course, it was in need of some type of a corrective move. Now, admittedly, I would be somewhat careful here because this correction might have more to run before we move higher, right? So I wouldn't be buying it. I wouldn't be buying it yet. I think it's long-term very bullish, as anything that has intrinsic value. But this recovery has corrective characteristics, so I would favor more weakness before we see more strength.
I mean, the chart overall is bullish, but
the chart overall is extremely bullish. Yeah. Yes. Yes, if we're talking about the long-term horizon, it's extremely bullish. But I don't think it should be bought yet. I think it's very dangerous. Yes, I agree with you, mate. Bitcoin. There it is. So, Bitcoin, a nice rally off the lows, equivalently to my lithium perspective. I am not convinced yet that Bitcoin is done correcting lower. This is what I plotted a long time ago, and I think that I'm going to stick to this possible interpretation. So I would favor more a failure of this rally. We can extend towards 60,000 again, I guess. I would favor a failure of this rally, another leg lower, and then a continuation to the upside. That's what I think. Steve Orstelius, how does QE get into the financial markets? If you look at the velocity of money, it is still very low and trending lower, so the QE is not hitting the real economy. It was my understanding that QE was an asset swap, and the banks have a special account at the Fed that earns IOER.
Yes, basically, the Fed comes in, buys securities that banks hold. Banks gets money, but that goes into their excess reserves. Excess reserves cannot be lent out. That's a problem. So it's basically these reserves, the banks then deposit those with the Fed, and hence velocity of money goes down. So that's the problem. QE does not address the average Joe out there.
Exactly.
Helicopter money does.
Exactly, and that is why QE is not really inflationary, having to do with consumer everyday prices, but what they're doing since COVID, which is more a bottom-up approach in handouts does.
Yeah. And why does this make financial assets go up? Because you have a huge buyer, the biggest buyer of the whole planet, just buying assets. Buying, they started with the government bonds, now they're doing MBSs, they're doing all sorts of stuff. So this force just drives asset prices higher. End of story. And then, keeping rates is low, then corporates buy back their own stocks. They issue, bonds at 0% interest or whatever, 0% coupon, not zero, but you know what I mean. They buy their own stocks, so there go equities as well. So it's just a vicious circle, or a
Needless to
virtuous
say
circle,
that having to do with the effect on stocks, needless to say that I do believe that all market participants that really understand how things work also believe that if need be, there will also be a direct backstop in equities. I mean, I've told you multiple times in the past, and I keep insisting in this. I do believe that when push comes to shove, the Fed will bypass that restriction it supposedly has from its charter by creating other type of facilities, and will also buy directly stocks if need be.
exactly like the Bank of Japan is doing.
Exactly.
Right.
Exactly. And I do think that institutional investors that speak on a weekly basis with the people on the Fed, etc., know that. So it's also the added moral hazard that the smart money knows that if it comes to that, the Fed is going to buy stocks off their hands as well, if need be.
Yep, they will change the rules as they need to.
Yeah, as they go, they make it up as they go. Actually, they've been doing that more prominently since 2008. They will keep on changing the rules as they go because they cannot possibly even consider the idea of letting the markets rebalance and reprice things. They don't even want to consider the idea. They will keep on pumping this Ponzi scheme for as long as they can.
Ideally, for the next 4 or 5 years, so that somebody else gets the bomb.
Exactly, right? Because none of them wants this bubble to blow up in their hands. The politicians don't want to, the central bankers don't want to, right? So they have a common incentive to just keep pushing and kicking the can down the road, as simple as that. Now, unfortunately, they don't care what is going to be the repercussions of doing something like that in the medium to long run. They don't care. They just care for the hand grenade not to explode in their hands as long as they're there. Now, they don't really care if the hand grenade is going to become an atomic bomb that can really make everything implode. They don't. As long as they cannot be considered by the media when, when things become nasty, they cannot be considered the immediate responsible parties because they will already be out and will have cast out on their tenure by giving $250,000 speeches, 1-hour speeches. They don't care. As Ben Bernanke doesn't care, as Yellen doesn't care, so on and so forth. Actually, now she cares. For the reason that she's now again in power from a different position, the Secretary of the Debt. The Treasury. Sorry, I keep forgetting. I keep confusing the two. So yeah.
Yep.
The question becomes when, at what level of fall in the market, plus 15, plus, something, I think it will be more about momentum. Once they see that momentum of a downtrend move becomes self-fulfilling, it scares investors to exit positions, etc. They will intervene even if the move lower isn't really substantial. Even if it's like 15%, they will start intervening if they start fearing that momentum is dangerous and can lead to an escalation. So I don't think it will have to be mostly about the percentage of the correction. For example, if for some reason, which I consider this almost impossible in this type of market environment. If let's say we ended up having a 30% move lower in a slow orderly fashion, which as I said before, I consider in this type of markets, this type of a move lower to be extremely unlikely, because these type of markets have only two gears. One, slow grind higher. Two, sharp move lower, right? So I doubt we can get an orderly move lower. But if we assume that we could get something like that, I think they wouldn't mind it that much, as long as the market looked orderly and people weren't really scared about momentum or any type of rhetoric behind it. I think they would let it be. Probably they would also find it a healthy somewhat rebalancing, but I don't think we can get that type of a move. I think whenever we get a move lower, it's going to be sharp, and I think that's going to scare them, and they're going to intervene as soon as they can arrange how to do it. Anything else before we call it a weekend?
I think we covered quite a few things.
Okay, guys, girls, have a wonderful Palladium. I did cover, mate. Nothing has changed since yesterday. Pushing all-time highs. I already gave you upside targets yesterday and the day before, etc. So we still have some distance to them. Eurocad. Okay, last one. Eurocad. By the way, dollar keeps on moving higher. Okay, it's interesting. Let's see how we close the day. We might get something to work on short-term targets on Monday. Let's see how we close the day. So Eurocad. Eurocad, and we close with this. Big picture, no trend, right? Always start from a top-down analysis. Big picture, no trend. Why? Because we are within a triangle, right? A big triangle, as you see. Shorter term picture, clearly a downtrend, and clearly this rebound we had out of this descending wedge has failed. We've already retraced, just by eyeballing you, I'll tell you that we've retraced at least 78.6%, and we seem to be moving lower. So look towards 146.50, and an eventual break below that, if we get it, it's going to be quite major, because as I said, long-term picture is that we've been without a trend for a very long period of time, right? So bottom line, as you realize, I wouldn't be doing something yet with Eurocad. I would personally be interested only if and when we finally got a decisive move out of this messy long-term consolidation. Oh, PLD is a stock. Sorry, I thought you used an acronym, for Palladium, because you frequently do. PLD. Is this the stock you want to talk about, mate? Okay, this is the one. Now, clearly bullish, right? I mean, we are pushing all-time highs. Now the question is, where to? Okay. So, not even a momentum divergence. So for the time being, 117, the first upside target, the closest upside target, and then 124.3, clearly above 112, it's bullish. Now, would I be chasing it here? Personally, I wouldn't, but there is not even a momentum divergence, so it remains very strong and in a very clear uptrend. You're in. I would be holding. You have no reason to get rid of it yet. You have no reason to get rid of it yet, as long as we are above 108 or 112, depending on how conservative you want to be with your stop losses. Basically, 108 is more important. I would keep holding this. Right? If you're already in and in the money, I mean, it has done nothing wrong yet. It seems to be very well bid. No indication that we're about to turn lower. So, yeah, kudos. I mean, you seem to be well positioned here if you're already in the money, and you just have to do the easy part now, which is manage risk, because you've already found yourself in a good position that is in profit. Okay, guys and girls, have a wonderful weekend. See
Thank
you
you,
back on
Steve.
Monday. Bye
Thank you,
bye,
everybody.
Stella.
Bye-bye.